agenda for today's meeting. So we will have our speaker, Chris, and also the Q&A part. We will also be having key landlord updates and reminders, leasing summary, maintenance, real estate market update, and also if you do have questions, we'll let you guys, we'll hand you over the floor, and then we're definitely happy to address that. And now, to introduce our speaker for today, I'll hand over the floor to Tiffany. Hi, Tiffany.
Thanks, Roel. All right. I'm really excited and so grateful that Chris Peden has agreed to spend a couple of minutes with us today. Um, Tax season is in full swing, and to say that his time is at a premium is like that's a total understatement. So, really appreciate Chris agreeing to spend a couple of minutes with us. There's a lot of hats that we as property managers have to wear that we're not licensed in. And one of those hats is helping our landlord clients to kind of navigate the tax situation and providing 1099s and cash flows, and you come to us with questions that we know a little bit about, but we don't know the details. We don't have the experience that Chris does. We're not CPAs, we're not tax advisors. So having Chris here in our local community as well as in kind of our extended freedom family is a great benefit. So Chris and his wife run Peden Accounting Services, and they are located right here in Manassas. Chris and his family are incredibly involved in our local community, from the Chamber of Commerce to other ways that they help to build and grow our entrepreneurial hub here. So over 20 years of financial experience, and has recently started adding in fractional CFO services for a lot of his clients. So we love how Chris is always looking to build and grow and modify to what his book of business, what his clients and what his community need. So good afternoon, Chris.
Tiffany, thank you for having me on.
Of course, of course. Um, Wanted to go through some frequently asked questions that we get, and I'm sure they're not new for you, Chris, and hopefully they also hit what some of our landlords that are on the meeting. Again, once we're done with some of these questions, we are going to open up for Q&A with our landlord clients. So jot down your question or even drop it in the chat if you'd like. Keep in mind that if your question is super, super specific, we may have to get back to you with the answer on that. We won't be able to get too deep in your particular property, but hopefully we can give some generalities that'll help guide you. So Chris, before we start with any of our questions, is there anything that you're seeing this year that is kind of new, different, anything else, anything that you'd want us to know, or common questions that you get?
Well, we did have the one big beautiful bill that really has not affected landlords that much, except for the depreciation, which on a lot of things you can now take the entire amount in the current tax year. Now that doesn't apply to like the rent, I'm sorry, the building itself or improvements to the building, which are going to be over 27 and a half years. That hasn't changed. Um, so I would say that there's not that much change. And the thing is, more things change, the more they stay the same. Everyone touts a big, oh, this big bill is going to come, it's going to change everything. Not really. So really, it's what I talk to people about is, look, if you've got a question, no matter how dumb you may think it is, I probably have heard it. So don't be afraid to ask, because I'd rather you ask me, say, in August or September than on April 1st. So let's do
Right.
something so we can be proactive and take care of you, and just throw things at me like, hey, if I've heard that you get an alpaca and keep that at your rental property, that's a huge tax credit. Is that the truth? No, it's not. But throw those at me, because at the very least I'll be entertained.
Nice. Awesome. So just let's kind of take it to a bit of like basics. What are some of your common tips for landlords, for your clients to prepare for tax season?
Well, the great thing that I always say is that if you can find, or if your tax preparer has a organizer, which basically has spots you can fill in, that is a big help. A lot of times we do not need receipts for something unless we have a particular question on something. So really, if you can talk to your tax preparer and ask them, hey, do you have an organizer or something? We will send that to you. You put the little numbers in the boxes, send them to us, and we'll be good to go. But I also say, I want you to throw up on us like you're a toddler with the flu. If you have a question on something, please include it. We can tell you yes or no, but if you don't tell us, we don't know. So throw information at us as much as you can and let us sort through it. Also, try to get your stuff in as early as possible because we start losing our minds towards the end of March.
Okay, so I need to pull up that email from Jenny, right? Excellent. So when you say an organizer, so are you referring to like a spreadsheet, a checklist?
Yes, it's just going to be a
Okay,
spreadsheet. Spreadsheets are good. I have a PDF that I can send you that you can go and just fill in little numbers saying this is how much in rent you've collected, this is how much you spent on supplies, this is how much you spent on this. So you just fill in some little numbers there, and if you got questions, ask.
got it, got it. Okay. So going on to the landlord, the rental side, when it comes to reporting income, what income needs to be reported on rental properties?
Well, so the rule is all income needs to be reported. So if you've gotten some income from various sources, like your regular rent payments, you pay any advanced rent, lease cancellation fees, tenant paid expenses, or non-refundable or retained security deposits, even fees like late fees, parking, paid pet rent, what have you, you're going to need to report that. So here, even in the state of Virginia, all rental income must be reported on your return. So you can report all income. You don't have to report every expense you'd want to, but you want to make sure that you get all the rental income in. And because you were going to have something like the 1099K, which reports like online transactions from PayPal and all those others, the IRS is actually able to see a little bit more into what you're doing. So it's not just the 1099 miscellaneous with the rents on there. It's going to be other forms as well. So the IRS is going to know about it, assume they know about it, and report as much as possible.
Exactly. And so for our landlord clients, one of the things that Freedom does for you is we do send the IRS, we're required to send the IRS the 1099, which you get a copy of as well. That 1099 is going to reflect all of the rental income that we collected on your property throughout the year. And that is when we received it from your tenant, not when it applied against the charge. So in some cases, we may have a tenant prepay rent, either that they've paid their January rent on December 30th, and so it's going to be reflected in the 2025 taxes. Or they've prepaid several months of rent in advance. And if they prepaid several months of rent in advance, you're you are claiming all of that income when it's received, even though it doesn't get into your checking account. If there's any issue in the following year with that income not applying to a charge, then it gets adjusted in your 1099 for the following year from Freedom. We've had a lot of questions about that. And so thank you for touching on that, Chris, that all of the income that's received during the calendar year is what has to be reported. So
Yes, ma'am.
moving
You get it. You hit nail on the head. Thank you, Tiffany.
Moving into the expenses side and the deductions. So, what's the difference between a deduction that can be made on the expenses versus depreciation?
Okay, well, a deduction really is expenses that keep the property up and running. Like you're doing some repairs, property management fees, utilities, insurance, those things are going to be deductions. Depreciation is going to be for things that you're going to have useful life for more than 1 year. Nobody pays more than a couple months of utilities at a time. We wouldn't pay 5 years of utilities in advance. but you may put a roof on the house, you may redo the kitchen, you may redo the floors. So I get a lot of questions. Well, how do I know if it's something I depreciate? And my rule of thumb is if it costs a fight on a flip show, it's probably something that's going to be depreciated because Armando Montalongo is going to lose his mind over the kitchen, something happening with a kitchen remodel. Something happened wrong with the paint, he's not going to carry too much. So
Right.
that's really the way to think about it. If you're going to get long-term value out of it, that's going to be depreciated. If it's just something to keep the property up and running, that's going to be a deduction.
Got it, got it. So it would be things such as, like you said, roof, like a refrigerator, a new HVAC system, appliances, washer dryers, or major renovations.
That's exactly right, Tiffany.
Awesome. And you mentioned a couple of common deductions. What are more of those common deductions as a residential landlord that we should be utilizing and taking advantage of?
Well, the big one's going to be mortgage interest because outside of repairing or replacing the roof, that's going to be a huge one, as well as property taxes. Now, a lot happened with the one big beautiful bill with in regards to that is that before this year, you had a cap of $10,000 that you could claim, but that cap's been taken away. So I'm seeing a lot on tax returns now that they're seeing less taxes because the state and local taxes are going up because they can claim more. So that's going to be a huge one. Things like insurance. We talked about maintenance and repairs and utilities, property management fees you need to pay. That's going to be one. Advertising and leasing expenses, what you pay to clean and turn the property over, that's going to be one. And HOA or condo fees. Those are all usual ones, but there are some ones that are missed. Like if you're traveling to your property to kind of check on it, what have you, if as long as you document what that is, you certainly can take that as a deduction, as well as a home office. If you're doing that purely for this rental property business, you can't deduct a home office if you have a W-2 job and are using your W-2 job for it. Sorry, you can't do that.
Right.
But also maybe have some software you use to keep up with the property. Any subscriptions that you're using for property management, the legal and accounting fees. Some of my fee is going to be deductible. So it would behoove you to give me a call and utilize my service.
Exactly, exactly. Well, that's great. And one of the conversations that I have with a lot of new landlords that are considering whether they want to rent their property or sell their property and whether they want to self-manage or use a property manager is talking a lot about cash flow and the cost, the expenses of hiring a professional manager or hiring even a realtor just to list the home for rent. And they don't realize that now that the home is a rental, it now is looked at in the eyes of the IRS as a business and it's treated as such. And so now you have business expenses, and some of those business expenses are going to offset the income that you're earning on it and could keep you from moving into a higher tax bracket based off of your ordinary income. So having an idea of what those deductions are right at the beginning and playing out some scenarios is something that I've recommended quite often to see what it looks like. You may have a really, really small positive cash flow just on a monthly basis, but after you consider the post-tax situation, your cash flow situation may be completely different in the reality there.
Yes, indeed.
So for you mentioned the big beautiful bill in terms of how that's changed some things for taxes. Anything specifically on the landlord side again that we didn't cover?
No, it's really Virginia has been kind of quiet about this. I know you're going to go into an update of anything regarding the laws, what have you. The big one's going to be the property taxes are going to be more deductible because there's not that $10,000 limit. So that's a big one that's going to help you in terms of your
Yeah.
state and local taxes that you're going to pay.
Excellent, wonderful. And then there's been a lot of talk in the real estate world regarding the accelerated depreciation that is available with rental properties for real estate professionals. So for those of us that are, well, first of all, what qualifies someone as a real estate professional, and what does that accelerated depreciation mean?
Okay, so what it means is that if you have losses and you're a real estate professional and you work a certain number of hours a year, I believe it's 750 as a real estate professional, the losses are going to be somewhat limited by passive activity rules. Now, I'm not going to go into that because you all have other stuff to talk about, but talk to your CPA about those. Um, but keep in mind that that allows you to take more losses during the year. But just because you can't be a real estate professional is doesn't mean that those losses go away. If you can't take them because of the passive activity losses, they're going to roll forward until you, at very latest, sell the property, and that's going to be a reduction of your income from the sale. So you'll get a tax benefit from there.
Got it. Very good. Any questions that I didn't ask Chris that I should have?
No, I think you've covered it. That really people ask me, all right, how do I know if I can deduct something? And what the
Mhm.
rule is that you deduct expenses that are ordinary and necessary for your business. So if it's things like, you're painting the walls of the house, yes, of course. You're replacing the spigot in the kitchen, sure. You're going to rent a Testarossa to drive you back and forth to the rental property and write off the rental payments. No. So because it wouldn't be ordinary and necessary, and I'm sure Tiffany's now disappointed because you can't have that good sports car with the hair blowing, wind blowing through her hair. But it just keep in mind, ask yourself, would a reasonable person consider this something that's ordinary? And also, can you support it? The top five rules of taxes: document. I've been through two IRS audits. First one took half an hour to do because we had everything all lined up. Second one, well, they had to call a lawyer because they weren't able to document anything, and they kind of got in a little bit of trouble. So make sure you can document what your expenses are and show receipts, not just bank statements, but receipts.
Perfect. That's great advice. So I want to open it up to open up questions to our guests. I have a question from Debbie. Debbie Edenhart. Hey, Debbie. Debbie is another one of our community partners here at Freedom. She owns security title insurance. Debbie asked, is it better to have an investment property in an LLC or a corporation or own it personally?
Well, if you have a rental property, that gets reported on a Schedule E of your tax return. So that's going to go on there either way. Now, whether you're putting it into an LLC or corporation, that's more of a legal question. So I've watched every episode of Suits, but that's the extent of my legal training. But that would be something to talk to an attorney about how that could help.
So, but if you have it set up as a single member LLC, that's going to roll to you anyway.
That's going to roll to you anyway.
Got it. All right. And yeah, so the tax implication side is figuring out if it's a single member or if you're owning it with multiple people is going to affect you differently tax wise. On the legality in terms of your liability, we got to put our attorney hat on, and none of us have that license here today.
That's it. Yes.
Awesome. Great question, Debbie. Maybe I'll have our landlord tenant attorney on next, and we can have all those fun questions with Shayna. All right. If you do have a question, you are free to unmute yourself and ask it, or you can drop the question for Chris into the chat box. While we wait for that, Tracy or team, anything that we didn't cover?
I think you
All
got it
right.
good.
Excellent. So
Thank you,
seeing
Tracy.
and hearing no others, Chris, we really appreciate any parting comments.
No, just thank you for having me on, and I will see you all after April 15th.
Excellent. Again, thank you so much. Very much appreciate you taking some time. You're welcome to hang out with us and listen to the rest of our meeting. If you've got to jump off, we won't hold it against you. Again, thank you very much, and we will continue to roll with our meeting.
Thank you.
Thanks, Chris. All right, well, we will move to the next slide.
Thank you so much, Chris and Tiffany, for that information. Now we can actually move to the next one. I'll also give the floor to Tiffany for some key landlord updates and also reminders.
Excellent. Yeah, so we are um, coming up to the end of March. The winter has finally, I think, let go of us here in Northern Virginia. It waited up until the very last day. I believe this has been the coldest winter that we've seen in Northern Virginia in like decades. And that showed for us, in terms of activity and maintenance and repairs and things of that nature. I am very excited about springtime and finally seeing all the trees in bloom. So, but with that, and continuing with what we just had a discussion with Chris on taxes, we did discuss during our January landlord Zoom meeting regarding 1099s and cash flows and kind of how all of that looks and where you find that information as a freedom landlord. And I just wanted to give you a reminder that your 1099s were posted to your online landlord portal. It's in the documents section of your portal. And we also loaded a cash flow statement. That cash flow statement for the entire year of 2025, along with a 12-month owner statement that looks very much like the statement that we post on a monthly basis, but it goes all there from January through the end of December. What those are really good for, the cash flow statement is great to provide to your CPA because it's going to detail out the income. Plus, it's going to detail all of your expenses. And if you need to find a receipt, if you need to find an invoice to support that expense, you can go backwards in your statements to the month where the expense was incurred. And you can download that entire packet of statement, which includes the invoice for the maintenance that we completed for you, and the bill that we paid for you. If you need some of that one-on-one, we're happy to jump on a Zoom meeting with you and do screen share and show you and walk you through exactly how to do that. We've had a number of questions over the last 2 months from landlord clients regarding the difference between the income that's reported on the 1099 and the total revenue or total money that came into your bank account in 2025. So keep in mind what Chris said, that we have to report all income that we receive, whether or not there's a charge associated with it. So that means if your tenant prepaid rent, so if they paid their January 2026 rent in December, then that income is included in your 2025 1099. And it includes all of it. So if there was a late fee, if there was resident benefit package, if there was anything in addition to just the base rent, then that total amount of money that we collected from your tenant is shown in the bottom of your cash flow statement as prepayments. In January of 2026, it then applied to the appropriate charge, and you'll have your 2026 cash flow and 1099 will be adjusted accordingly to then take the income out of your responsibility that is not supposed to be to you. So we only see that for the most part at the beginning of the year and end of the year with prepayments, but it always brings up questions. So we're happy to go through and answer that. What we've also guided quite a bit of this year is changes in ownership to property during the year. Whether someone passed away or you retitled the property from individual ownership to a trust, or you retitled the property from individual to an LLC, like Debbie was asking about, but then you failed to notify us of it. We can make some corrections to our 1099. The sooner that we know that information from you, the better. So if you have any plans of doing that in the future, if there's going to be any ownership changes to your rental property, we need to be included in that. Not only is that going to affect the way that we report the taxes, but it also means that we have to update our property management agreement, because the property management agreement is between Freedom and the owner of the property, which then reflects on what we put in the lease. So we need to know who the owners of all of our properties are. Moving into number 2, upcoming tenant turnovers. We are coming up to the busier season of the year with move-ins, move-outs, with both your tenants moving out, with property owners leaving their home and turning it into a rental, as well as landlord clients coming back into the area and reoccupying their properties. So a few things to keep in mind as we come up on this very busy season of tenant turnovers. One of our big goals is to minimize the vacancy time for you in between tenants. And so that means that we are trying to pre-lease, we're trying to pre-market the home while there's still tenants in place. And we're also doing walkthroughs of the property before the tenants are out so that we have an idea of what's coming. We're not doing the move out inspection and then finding out that we have $5,000 worth of routine wear and tear maintenance that needs to be done. We'd like for you to have a heads up at least 30 days in advance so that you can budget accordingly. Keep in mind that in order for us to turn these properties quickly, we need quick approvals back from you. We need prompt communication. And also, please be prepared for some of those potential repair and make ready costs, especially if you've had a long time tenant in the property, or if it's been a while since we have changed carpet or repainted the property. The best time to do that is when it's vacant. And some of these situations, we may only have 10 to 15 days between when your tenant leaves and when a new tenant is slated to move in. And we can make that happen for you, but we need you to partner with us so that we're able to get everything done and get the property really good shape for your new tenants to come in. In addition to the high tenant turnover time, spring maintenance brings with it its own kind of book of transactions, which also includes an uptick in exterior and seasonal for HOA inspections. HOAs tend to do their annual inspections, if not twice a year, they at least do it in the spring. So we're going to start getting quite a bit of those back in the mail on your properties. If you get it, please send it to us as soon as possible. If you get the inspection report with any violations that need to be remedied, please send that to our team as quickly as possible so that we can make sure that you are in compliance as well as get the information to your tenant if they need to do something to change that. So we do expect a temporary seasonal increase in maintenance requests and work orders and those expenses, especially on things such as outdoor exterior trim repair, power washing, deck repairs, fence repairs and restaining, caulking on the exterior trim and doors, and siding. And then as an sort of a precursor for the rental market that's coming up, we here in Northern Virginia, as well as kind of across the country, are expecting the market to stay pretty flat. In Northern Virginia, we experienced a huge outflow of residents and jobs in 2025 with the DOGE cuts that impacted our region quite a bit. We haven't had that huge re-occupancy. We haven't had those jobs come back. And so that's not going to equate to more residents moving into the area. And what we've also already been seeing is almost a triple the number of rental properties on the market. So that means that there's more inventory on the market. There's more choices for fewer renters. That's going to mean that we're focusing on retaining good tenants instead of increasing rents, that we may have lower rent prices this year than we've seen for the last couple of years. So we're really going to be focusing, instead of on that aggressive growth, focusing on retention, the overall experience that your tenants are having, taking care of your property, and trying to be as budget conscious with the expenses on your property as possible, because we know that lower rents doesn't mean that you're not also having increased costs in other areas, such as taxes and insurance. The cost for repairs is going up as well. So we want to make sure that we're taking as good of care of your property as possible, keeping your tenants as happy as possible, without that being such a huge hit to your pocketbook. We're happy to have those one-on-one conversations to strategize what we should expect with your property going forward this year, just reach out to a member of the team and we can definitely have that happen. So those are some of the kind of updates and reminders that I wanted to go through before handing things off to the team and to wrap up our meeting today.
Thank you so much, Tiffany, for the updates and also reminders. Now we can actually move to the next part of the meeting to give us like an overview on the leasing activity. I'll give the floor to our property manager, Tracy. Hi, Tracy.
Hello, hello. Sorry we're having video issues, but I did want to come and talk to you a little bit about how things have been going for January and February, and kind of, as Tiffany is saying, get prepared for what we're going to be encountering the next couple of months. So Freedom has listed properties during those months, and we did 6 listings. And out of those 6 listings in January and February, 3 of those properties were leased. Average days on the market for Freedom was about 49 days. In the overall Northern Virginia market, it was about 50 days. Now, we do have some stats on all of that in our geographic area. So wherever Freedom would manage a property, which is generally an hour of radius, we found that there were 211 rentals that were rented in January and February, and that those properties ranged in prices all the way from $1,500 to $6,000 a month. And there are currently 1,567 active rentals with an average of 53 days on the market, and that is expected to increase. In the Manassas Park, Prince William area, we're looking at about 300 plus active rentals, and average days on the market is about 64. So that is definitely higher than the overall geographic average. In Fairfax City, in Fairfax County, we're looking at a little over 600 active rentals, and those are on the market approximately 55 days. And then in Fauquier, there's only about 14 active rentals. And those are taking approximately 74 days to get rented. So further out in the country. And then in Loudoun, which has normally been a very booming part of the area, they currently only have 212 active listings, and they're finding that their listings are renting in roughly 40 days, which is much faster than the surrounding areas. So it's definitely a lot different than what we're used to. At this time of the year, we're used to ramping up and timelines going down and rent prices going up, but we're not going to see that this year as of yet. Top reasons for people moving out: military orders. We all have seen that there's been a lot of activity there, and we have a lot of home purchases. We have owners who have decided to get out of the investor market and move on to other avenues for their income. And we have a good amount of tenants that are not renewing this year because they are buying homes. So again, those are all factors to think about. And certainly every one of those scenarios, we can help you through that process.
Great. Thank you so much, Tracy, for sharing that information. In line to the overview of leasing performance, I would also love to share with you guys the maintenance performance overview for January, also for the February month. So for this maintenance performance, this is one of the biggest, drivers of both tenant satisfaction, as well as the overall property condition. So as you can see, for January, we have total of 63 service requests, and versus to February 52, and overall resident satisfaction rate of 4.12 for January, and also perfect 5 for the month of February, which I believe shows to the average completion time that we are focusing and that we keep on improving, addressing all the maintenance issue that we're receiving to our clients. So we shows here like great improvement from last year. We're actually averaging 6 to 7 days average completion time handling maintenance requests. And these are the common issues or maintenance issues that we receive for the last 2 months. So that includes appliance repairs, water leaks, heat and not working. And also what this number tells us is overall we're maintaining strong service levels with tenant satisfactions is very high. Also, we're seeing predictable maintenance patterns, which help us plan ahead and also control costs. So as we head into spring, we definitely expect maintenance activity to increase. So this is something that we are proactively preparing for. Yep, yep. Thank you so much. Anything, Tiffany,
Roel,
maybe
I
I
wanted
missed
to
out?
jump in just real quick. I meant to put it on the slide for comment, so apologies for interrupting. But everyone, all of our landlords who have a property that has gutter cleaning has recently received some communication from us regarding gutter cleaning that was done on your property during the fall and winter of 2025, as well as the what we have set your property up moving forward to have the gutters inspected and serviced. We changed our policies here at Freedom several years ago to remove the gutter responsibility from tenants and onto owners. Far too much liability, and there were far too many gutters that were not being cleaned properly. And so that is a landlord responsibility. We did a huge project over the last couple years with making sure that we understand what your property needs. If your property does have gutter guards, obviously it doesn't need to get checked every year. If your property is in a location that doesn't have a whole lot of tree cover, then it doesn't need to be checked every year. It maybe needs to be checked every 2 to 3 years. And if your property is in an area that has a lot of tree coverage, then the likelihood of that needing to be cleaned 2, if not 3 times a year is pretty high. And so we have programmed and scheduled your properties accordingly. So if you did not remember getting an email from us here over the last month regarding the cadence of your cleanings, and you're curious about what you're set up for, then please let us know. Reach out to Roel. We'll be happy to let you know what we have that and why we have it set up that way. But just wanted to kind of bring some attention there, as there's been a lot of communication and questions back and forth, and we want to be as proactive as possible. So this coming fall, we can get on that project as quickly as possible without it being a hassle for our owners or for our tenants. Back to you.
Thank you, Tiffany, for that reminder. Now, for the next slide that we have, I'd like to call Stacy to give us the real estate market update.
Hello, everybody, and thank you all for joining today. Wanted to give you a quick update on what we're seeing across the Northern Virginia and Washington, D.C. metro housing market based on the most recent data from Bright MLS. Overall, the market is continuing to transition from an extremely competitive environment of the past few years into something much more balanced, with more inventory, slightly slower sales, similar to like we're seeing on the rental side, and buyers taking more time to be able to make their decisions. There's really 3 key trends that are shaping the Northern Virginia market right now. First, inventory is growing. Active listings in Northern Virginia have increased about 11% compared to last year, giving us much more buyers, or buyers more options, I should say, than they've had in quite some time. Second, the sales activity has slowed slightly. Closed sales were down 2% year over year, which reflects more affordability pressures and buyers being a lot more selective. And third, homes are taking longer to sell. Just like on the rental side, days on the market has increased to about 22 days. And that's a clear sign that the market is becoming less rushed and much more balanced. Locally in Prince William County, it continues to mirror the same as the regional trends. Inventory levels are increasing and buyers are seeing more opportunities to compare homes before making offers. Buyer demand across the Metro DC area is still present, but much more measured. In the Bright MLS demand index for the Washington metro area, currently sits about 66, which indicates that limited but steady demand as buyers are adjusting to the mortgage rates and affordability considerations. So what we're seeing is that buyers are still active, but they're being much more selective and strategic. So what does that actually mean in practical terms? Our buyers have more options and a little bit more time to evaluate homes and negotiate. For sellers, homes are still selling, but success really depends upon an accurate pricing, strong presentation, and strategic marketing. Homes that are prepared well and are priced correctly are still attracting really strong interest. In summary, the Northern Virginia and DC metro housing market is moving forward to a more balanced environment. Inventory is rising, homes are taking a bit longer to sell, and buyers are gaining some more negotiating power. But demand still remains strong, and prices still continue to hold relatively steady. In today's market, success really comes down to strategy, preparation, and understanding your local micro market. And that's where we're here to help you in navigating that. If you're thinking about selling your rental, we are here to provide you with a free, no obligation valuation to see what your property is worth in today's market. Or if you're interested in adding to your portfolio, please don't hesitate to reach out. We have an entire team here to help you out with whatever your real estate needs are. That's my summary for right now.
Thanks, Stacy. I wanted to jump in real quick. Those of you that know me know I like to jump in and put my 2 cents in. So it wouldn't be it wouldn't be a landlord meeting if I didn't. I wanted to as well let our landlord clients know that getting a plan in place ahead of time is so incredibly important if you want to make any changes to your investment property. There's a lot of factors that need to be considered. We can't just turn your property into a sale listing in 30 days. And it may not be the right move for you either. And so we want to make sure that we are evaluating the market, that we're looking at your property, we're looking at any leases that are currently in place, and then we're also considering potential tax implications for you. If the property has been a rental for a longer period of time, then you may be paying capital gains taxes on that sale. And if you're not taking that into account at the front end with a bigger strategy like a 1031 exchange, then your bigger plans might completely go kaput because we didn't do things right from the beginning. So if you have any thoughts, any plans to sell later this year, let's get started on that sooner than later. We are also happy to collaborate with your preferred realtor if you have a trusted local realtor that you've used a lot, instead of using a member of the Freedoms team, but always here to help guide through that and bring in the local professionals, whether it be mortgage, tax, and attorneys to help guide us through that process. Additionally, if you want to add new properties to your portfolio, we do. Every once in a while, we have landlord clients that are interested in selling the property that we are managing, and usually selling that at a discount off of full market because it's tenant occupied and it's needing to appeal to another investor. We also have lenders that are doing what's called DSCR loans, debt service recovery loans, where you qualifying for the mortgage to purchase that investment property is based wholly off of the income that's coming in off of that investment property and not necessarily your earned income. So there's a lot of financing options and possibilities to add to your investment portfolio. And we've seen some good moves over the last 2 years with picking up properties that have been maintained really well. They have good long-term tenants in place, where you're able to kind of add to your overall wealth portfolio. Let us know how we can help you to achieve those kind of bigger goals. And now I'll hand it back over to Roel.
Thank you so much, Tiffany, and also Stacy for that update. Now, we would like to open the floor for any questions, or it could be someone would like to share anything that we talk about. Feel free to unmute yourself, raise your hand, or utilize our chat box so we can see your questions.
So we do have a question regarding the gutter cleaning that we were talking about, asking, should we be looking for something on the portal to pay for that service? So that's a great question. If gutter cleaning was done on your property, that has already been billed and paid. And so you will see that if you go back in, depending on when it was done, you'll see at some point in the end of 2025 in your expenses. Again, happy to go through that specifically with you. If you'd like, Lisa, we can share with you specifically when that was done on your property, if it was done on your property, and when that was paid out.
Okay, I just wanted to make sure that I didn't owe you some money.
Oh, oh, we're going to come and ask you if you owe us money.
Okay, just checking.
But thank you for checking and making sure.
Okay.
All right. Happy to answer any other general questions from our attendees. All right. Any other feedback from the team that you'd like to add before we wrap up?
I'd like to add something.
Yes.
As we've all discussed about how the market has become more difficult, if your property comes available on the market, we are doing weekly checks on the properties right now. But once the weather gets settled, then we'll probably go to every other week, just to make sure that things are being maintained and that there's no debris gathering at the front door and nobody left lights on and things like that, and make sure no trees came down. So those inspections are going to be shared with you. Those are what we call vacancy inspections. Also, in your weekly updates, we will be including some language where you can ask to have a one-on-one chat to discuss what's going on with the market and your particular property. So say we've been on the market for a couple of weeks and we're not really getting any activity. The pricing looks right. The condition looks right. We may just be dealing with volume. We may be dealing with who knows what. So that opportunity is being afforded to all of our owners through a Calendly link where you can schedule a 30-minute chat with me and we'll talk about it. And again, 1 month of vacancy is not ever going to be recaptured with a $100 a month rent increase. Sometimes it's better to cut the bleeding and move on. So these are conversations we can have, and everybody's circumstances are different. So that's why we're just opening that door up again, trying to be more transparent, trying to offer more comfort and assurances with our property owners that we are keeping their best interests at heart, and that we're taking time to stay in touch with the market and not just throwing a sign up in the yard and a listing and saying, okay, people come and get it. So those days are gone, or at least for now. Yeah. So anyway, just wanted to let people know, because if you don't have a property on the market, you wouldn't know that. But If you get your property back on the market this year and future, then this is another service that Freedom's throwing into the mix.
Excellent. Thank you, Tracy, for that reminder on what our process is while your home is vacant in between tenants. We want to make sure that it's being maintained, that it's safe, and that it's showing in the best quality. And that also gave me time to remember something else that I was supposed to tell everybody about, or as a reminder, I should say. And I'm trying to tell as many people as possible because I do not want you to be surprised when this becomes a new law in Virginia in July. There is a bill that is currently on the governor's desk to be signed into law in Virginia that is going to take the 5-day noncompliance timeframe and turn that into 14-day noncompliance timeframe under the VRLTA. So VRLTA is your Virginia Landlord Tenant Act, and that is, it covers all of the laws that around what we do. There's no way around it. So if you own rental property in Virginia, you are covered under VRLTA. And so this is going to take that 5-day notice to 14 days. So that means if your tenant does not pay their rent, our process currently, tenant doesn't pay rent, they have a 5-day grace period. So on the 6th of the month, rent is late. Currently, we send them on the 6th of the month a 5-day non-compliance notice. That notice says, shame on you, tenant, you haven't paid your rent. You have 5 more days to pay, and these are the instructions for how to pay it. And if you don't pay, then based on the VRLTA in your lease, we can go to the courthouse and we can start the process for an eviction. So that means that on the 11th or 12th, depending on weekends, holidays, we are then going to the courthouse to file for that process called an unlawful detainer. So that 5-day notice time frame is what's changing. It's changing from 5 days to 14 days. So now, come July, we expect it to go into effect in July. Instead of a 5-day notice on the 6th, we are giving them a 14-day notice on the 6th. The intention behind this by a lot of tenant advocacy groups is to give tenants an opportunity to get to their next pay cycle, to make good on their rent payments. Unfortunately, though, what that does for us and for you, our landlords, is it's now pushing you into month 3 of not getting rent. If the tenant is in that situation where they're not going to pay rent and they're going to get evicted for it. There's nothing we can do to get around it. There's nothing that we can really do to speed up that cycle. Here in Prince William County and surrounding counties, if we end up needing to take tenants to court for non-payment of rent, for an eviction, the fastest that we can usually get that eviction through is in 60 days. So this is going to push us to 75 to 80 days, being the fastest that we can get an eviction through. So what we're advising all of our landlord clients is to just add a little bit more to your savings. Thankfully, our eviction numbers are really low. They've always been really low, and that's because we do a really good job on the front end of screening tenants and managing the property and holding them accountable. But when it happens to you, if it happens to you, we don't want you to not be prepared. So if you currently have 3 months of savings set aside, in terms of 3 months of housing costs. So if your property has a mortgage, taxes, insurance, management fees, condo dues, HOA dues, all of that, have at least, if you've had 3 months, bump it up to 4 months. If you've had 4 months, bump it up to 5 months. Just in case. If you have a line of credit that you use for that, see if you can get an increase in that line of credit, just so you have a little bit of a bigger buffer. Because if something like that happens, we're not going to have a whole lot of lead time for you to give you before we know that you're not going to get that rent payment. What that also means is if your mortgage payment is due on the 16th of the month before you get a late fee, and you count on this month's rent to pay this month's mortgage, that's not going to be able to happen if your tenant doesn't pay their rent. So again, these are all if situations. This is worst case scenarios as well. But I'd rather you be prepared for a worst case scenario than be caught in a financial hardship. So if you have concerns about your property specific or how the more details about it, happy to go into it with you. Just reach out to one of us and we can get a call scheduled. But I don't want any of our landlords to be surprised when this goes into law in July and it takes longer for us to execute that process. So with that, I'll put out for any other questions. All right, Roel, I'll let you finish this up.
Yeah, thank you so much, Tracy and Tiffany. So this is for everyone, just in case you have questions, pertaining to your property, feel free to reach out to any of our team members, and we'll definitely happy to, address that for you. And again, we would like to say thank you everyone for joining us today. We hope to see you again in the next Landlord meeting. So feel free to reach out if you do have questions.